Good afternoon, and thank you for joining me for another office hours training. I am Crystal L. Gunn, your financial strategist, and happy Monday to you. It's part of that job as a strategist. Being on the business side or the personal side is to help you create, will help you heal, redefine your personal financial relationship, right? And to help you build that strong business base. And I do that through bringing you tools like life insurance and teaching you or giving you information on financial, like being able to plan your finances. So anything that relates to um, your financial relationship, helping you build a strategy, helping you have aha moments, bringing you information that you may not have thought about. That is just what I do, and I absolutely love it. And since October is Financial Planning Awareness Month, I'm going to go through things this month that are essential in building your financial plan for you, your family, and the generations that follow. Because remember, it's not just about you. We have to plan for these generations that are coming behind us. So today I want to talk about credit score. I've talked about credit extensively, but just I want to give some pointers again because you may not have seen those scores. You may be new to this channel, so definitely make sure that you subscribe to this channel and share this information. But let's talk a little bit about your credit score. Just some high level things on credit. I don't want to do a deep dive. I've done deep dives. I'll do deep dives again in the future. But that credit score is more than just a number, right? And so it's a key to financial opportunities, right? So the higher your credit score, the better, because you're open to more opportunities, right? And I get people referred to me from banks and from realtors who, their client wants to purchase a house, but they're not credit ready. Or I have people call and say, hey, I want to purchase a house, but my credit needs work. And I always tell them, and one of the first things I ask, well, what is your time frame? Because if somebody says, 3 months, or somebody says, well, I just signed a lease and I don't want to sign another lease next year, then it's like, okay, if you have to do it quick, then we just need to get your credit where you can qualify for whatever that minimum loan, whatever the minimum loan program is, where if you have time, it allows you to get your credit where it needs to be so that you can qualify for all of the programs, so you can pick the one that serves you best. And serves you best just doesn't mean getting you in that house. Okay. So having really great credit just gives you more opportunities, right? And I'll say it this now and I'll say it at the end. Don't wait until you need your credit to start looking at it and to make sure that it is top notch, that it is where it should be. So let's just look at some basics on credit, which people still don't know. And it's cool. We know we're not taught this stuff by design. So for some, it'll be a refresher. For others, it will be new. So one of the first things is actually, what is your credit score? Well, it's a 3-digit number ranging from 300 to 850, but it represents your credit worthiness. The higher the score, the better your financial health appears to lenders. And that is what this score is about. You'd be surprised at, first of all, everything that is driven by your credit score, from insurance to, whether or not you have to pay a deposit for utilities, things of that nature. All of these things, they're looking at these credit scores. So to have your credit scores as high as they can be. And when I'm talking about that, I'm talking about really over 700, right? Because it goes to 850, and being in the 800 club is great, but and take this coming from somebody who has originated mortgage loans and actually even owned a mortgage. I was a mortgage broker too, way back in the day. But if you walk in and you're over 700, definitely over 720, whoever you're dealing with is static, right? They're static at that 720, they're static at that 780, they're static at that 820. You know what I mean? We see less 820s, but we're really happy if you're in that 700s, because most likely you qualify for 98 to 99% of the programs that lender, banker, whatever has to offer, right? So the higher the scores, the better. The three main credit agencies: TransUnion, Experian, and Equifax. There are other reporting agencies, but these are the three that lenders look at and use. These are, and they all have their scoring model, which is really, let me take that back. They all use FICO scoring models. They could be on a different version, right? Or I'm sorry, or your lender could be on a different version, right? So, they may not all today have FICO 10, right? Don't overthink that. Don't get bogged down with that. I've had people call when I was writing mortgage loans a few years ago before I retired from that. I would have people calling, well, what version? What version are you? What FICO version, is the lender using? I'm like, well, what's your credit score? You know what I mean? Because if your credit score is over 700, it really doesn't matter, right? So the higher the credit score, the better. Don't get caught up in the minutia and all of the other things that you see out there on social media, all of the hacks and all of the things, right? Instead, pay attention to what actually impacts your credit score. Payment history is 35% of what your score is. You cannot get around it. It's the highest contributing factor. So late payments hurt. Pay your bills on time all of the time, right? So, you'll hear the things, oh, pay by this date and do this and worry about this date. If you pay by the due date and you get in the habit of doing that, you really don't have to think about all of those other things. Don't overthink the thing and make the thing harder than what it is, right? Pay your bills on time, right? Credit utilization is 30% of that. So keeping your credit card balances below 30% of the limit not carrying a credit card balance is the thing, meaning you get the statement, you pay the statement in full, not paying it off before you get the statement and you pay it in full, right? And if you have your financial system of success, that is efficient and effective budget setup, this should not be an issue. However, if you want to see a nice jump in your score, pay down any of those credit balances that are over 30% of the limit, pay them down to 29%, as opposed to paying them off and then come back and work to then pay them off. Like if you got 4 or 5 credit cards and they're all over 30% of the limit, instead of paying one off first, pay them all down. If you're trying to see a quick jump in your score, because maybe you're trying to qualify for a mortgage or you want to buy a car and you want to see a quicker jump in your score. So instead of paying one of them down, pay them all down below 30% of the limit. You'll see that jump in your score and then circle back and start to pay them off. Length of credit history is 15%. So how long have you had credit? So I'm not a fan of the store credit cards, the Macy's, the Nordstroms. I'm just not a fan. You can go in, you can buy the same items on credit with a Visa, MasterCard, Discover, or American Express. And typically those rates might be better. So I'm not a fan of store credit cards unless Walmart, Home Depot, Menards, and Lowe's, because you can go in, especially if you're a homeowner, you can go in and buy things that you need for your home, right? But just regular store clothes and things, I'm not a fan of those credit cards. But if someone that I was dealing with said, their very first card was a Victoria's Secret card, and it was, and it's had it for 15 or 20 years, or then I'm like, well, we're going to keep that card because of the length of history. So history, how long you've had credit, 15% of your credit score. Credit mix, What type of credit? Credit cards, installment loans, car loans. That's 10% of your score. Don't get caught up on this and think, oh my God, all I have is this credit card loans. I need to go get something else. No, you don't. I see it all the time. 700 credit scores, one credit card or two credit cards. Don't go out and just get more credit for this. My daughter, over 750 credit score. She has two credit cards. You know what I mean? It's about how you're using that as well. So mix of credit cards. Don't overthink this one. Just get the credit that you need, but understand that credit mix is 10% of your score. And the new credit inquiries is 10%. So too many inquiries can lower your score, but if you are going to pull credit, it also, I don't know, to me, it just makes sense to know what credit bureau, whomever you're working with, what's the credit bureau, what's the credit agency that they use? Is it TransUnion? Is it Equifax? Is it Experian? Because every lender doesn't pull the same one. Now, if you're going to get a mortgage, they're going to pull all three. But if you're going to get a car, you're trying to get a credit card, they're only typically pulling one score from one credit agency, right? This credit union may use TransUnion. This other one may use Equifax. Another one may use Experian. So just knowing that, right, can be beneficial when you're looking for other credit, because if you've just gone somewhere and, you don't want 10 inquiries this month in Experian, you know what I mean? So it's 10% of your of your credit score is new credit inquiries. So you do want to pace yourself on getting credit. Again, there's always a strategy to everything, but you want to pace yourself on getting that credit. Now, how do you improve your credit scores? Pay your bills on time. That's number one, right? Because when we talk about lowering credit card balances, which is the next thing, but if you're not paying stuff on time, I don't care if you reduce your balance. If you're still over here having late payments, your score is still going to drop 30, 40, 50 points, for every 30-day late. And for slow pays, where you're not going to see that drop like you would if you were 30 days late. Slow pays, meaning, the payment was due on the 5th, you didn't pay it until the 20th. That's a slow pay. You're not 30 days late, but it is a slow pay. So you got to be careful with those things too. So paying your bills on time. A good way to do that is automating payments. Reduce credit card balancing. Again, aim for the utilization rate of below 30%. And this is, again, on credit cards, and setting them up to use effectively. Use your credit cards the right way. So not carrying balances, right? But using them. Keep old accounts open. We talked about that, because when you close an account, it does have a negative impact on your score. And just keep track of your credit. What's going on your credit? One of the things that I suggest everyone do, from their business account to from their business bank accounts to their personal bank accounts to their credit cards. Every time there is a transaction that happens, you need to get a notification on your phone, right? And you may say, oh my God, I don't want all of those notifications. Those are really, really important notifications. One, what's hitting your account because you set something up on automatic payment. You know that it's hitting your account. Two, it's a quick way to catch any kind of fraud. And with data breaches happening, I don't know, definitely almost every day, you don't know what's out there, right? You don't know what's happening. Something can hit your account, and it's easier or better to do the fraud dispute right then. So having those notifications come to your phone, I'm telling you, it helps you. And it doesn't matter, because the notification is going to come if you just did the transaction yourself. But again, knowing what's happening. And then you also look at them. Don't not pay attention to them, because you want to make sure that the cost was keyed in correctly, even if it was you. So you want to get in the habit of that. So set up those automations. Some common mistakes that you want to avoid is maxing out your credit cards. That's just the biggest one. For a few reasons. One, yes, you're going to take a hit on your credit score, but the other reason is now you're paying interest on all of this, this $100 dress that you bought. Now you've paid $300 for it because you're trying to pay, your credit cards are maxed out and now you're paying all this interest. So avoid maxing out your credit cards. Avoid closing old accounts unnecessarily, right? So again, that your very first account was that, you know, Victoria's Secret. We'll go in there at least once a quarter and buy something, right? And then pay the statement balance off when you get it, just to keep it open. You don't want it sitting there idle, right? On those store type credit cards. Another mistake is not monitoring your credit report regularly and or seeing those transactions that hit, having those transactions come to your phone. I'm telling you, it just makes a difference, and it's going to save you, again, as we're going through all of these data breaches. And then not using your credit cards not using your credit cards and not using them properly are common mistakes to avoid. So we'll do credit checkups with people, and they'll say, well, their credit score is not moving. Then they don't understand why. And when we start to dig, and I said, well, tell me about your credit cards. And they have 2 or 3 credit cards that have zero balances, but they're not using them at all. And so we put a plan together in order for them to use them so that they can use them to help impact their score, right? So not using your credit cards properly, and then understanding how, again, to use your credit cards, not carrying the balances and all of that. But I show people how to set up a strategy that for use, and then that's going to help see positive impact in that score, right? So do me a favor. Think about your current profile. Are your scores over 680? Are they over 700? Right? Are you carrying any credit card balances from month to month? Are your scores not increasing? Right? You may or may not need credit repair. Everyone doesn't need credit repair, right? I have people who send clients to me who can't qualify for a thing, or people that come to me because they want to go out and get a new car or go out and buy a house, and they know that their credit is not where it needs to be. But they don't always need credit repair. Sometimes it's just strategy to boost the score, meaning they don't have bad things on their credit. It just might be insufficient or not moving. And so we can create that strategy around that. Sometimes it's the little tweaks that make a really, really, really big difference. And it's not always about credit repair. So sometimes it's just about a strategy to work to get your score to improve. So let's talk about it whenever you're ready. Building and maintaining a strong credit score doesn't happen overnight. And that's the thing that I want people to remember, because credit is done on a 30-day cycle, right? What happens last month is reported this month. So it happens on a 30-day cycle. If you talk about credit repair, it happens on a 30-day cycle, but they don't always respond if you're trying to repair something. So you have to remember that building, correcting, repairing, restoring your credit, it doesn't happen overnight, right? But it's the small, consistent actions lead to big improvements, and then being able to set things up and automate things and create, following that strategy to get you where you want to be, because your credit is different from someone else's. So the same strategy is not going to work for both of you, right? Your strategy has to be specific to what's going on your report. Don't wait until you need your credit to make sure it is as good as it can be. You don't know how many times I turn people away for credit repair or credit restoration because they have this unrealistic expectation that we're going to go into this thing and it's going to happen in 45 days and then you can buy this house, next month. And I'm just like, I'm not going to work under that sort of pressure, because I'm telling you from the beginning that that's not how that thing works. So don't wait until you need it, you know what I mean, to start looking at it, monitoring it, and making sure that it is as good as it can be. And don't make the minimum your maximum. And what I mean by that is, yeah, you want to buy a house, you can qualify here at this score, right? But this score is low. Like FHA in the state of Michigan says you can do a mortgage loan down to a 580. But are you kidding me? Is this only where you want your house to go? Or this lender may require a 620 because they put their own overlay on top. Okay, so you're just going to strive for that 620. Don't let that minimum be your maximum. You still want to make sure you learn how to utilize your credit. Plus, you want to be able to teach your children. If you just have a 580 or a 620, what can you teach your children about them maximizing and working with their credit? Plus, just like with grades, it's better to start from zero and build and maintain it effectively than to jack it up and then have to go back and repair it, right? It's easier to start with an A and maintain an A than to start with a D and try to bring it back up to an A, right? And so when we talk about that 2053 prediction of Blacks having zero wealth, getting your financial house in order is one of the ways that we ensure that prediction doesn't become a reality. And credit is part of getting your financial house in order, right? So again, we talk about breaking those generational curses. If the curse is going to stop with you, then the new system of success will start with you. That means you need to know how to build and utilize your credit effectively so that you can tell your children so that they can pass those tools down to the next system. That is how we break those generational curses. That is how we can build and pass down generational wealth. That is how we interrupt and disrupt and stop that 2053 prediction of Blacks having zero wealth. So, what is my favorite thing for today? My favorite thing is credit checkup. Right. Again, a lot of times people don't need credit repair. They come all of the time. It's one or two things that they just need to do to tweak it. So do this credit checkup. Like it's 1 hour. We will talk about your credit. If there is a strategy that you need, we're going to talk about what it is that you need to do and how you need to get there. And I'll give you the tools and resources in order to be able to make that happen. But do that checkup. It's worth it. Because you're going to learn a lot. Again, everybody doesn't need credit repair. And depending upon what it is that you're trying to do, you know, you might have a collection account on there, and is it really necessary to get to even go down the road to fight, to do all of that, to try to get that collection off? It might not be. Let's talk about it and figure it out, right? Because again, it may not be credit repair. There may be other things that we do to boost your score so that that collection account winds up becoming a non-issue, right? So that's what that's part of what that checkup is. You're trying to do things on your credit. It's just not moving. Well, let's look at it. And just like you do medical checkups, if you're good, the doctor's going to say, hey, you're good. Keep doing what you're doing. See you next year. If you're good, if you're credit, if you're doing all of the right things, I'm going to tell you that you're good. Keep doing what you're doing. There's never been someone that I've done a credit checkup for, though, that there wasn't a couple of things that I gave them to tweak what they were doing. And then they started to see more movement, which is ultimately what they wanted. So credit checkup, the link is in the bio under financial and/or credit checkup. Schedule yours today. So what are you going to do now? Pull your credit reports with FICO scores. Why with FICO scores? Because FICO scores are the scores that lenders use. So you have things like Credit Karma and some of those other reporting agencies. And people, you may have heard people say, oh, well, Credit Karma score is wrong. It's not wrong. It's just a different scoring model. They're using something called the Vantage scoring model. So you have to be careful when you're looking at credit scores that you know what's being pulled. Is it FICO or is it Vantage? Because that's also going to be a determining factor when you get ready to go get some credit, knowing what, how you're pulling, knowing that the lenders are using FICO. You want to make sure you're equipped to know what those FICO scores are. So pull your credit reports with FICO scores, print them out every single page. Yes. And review all pages. Now, I know you can go and get your free credit report. That's not the kind of credit report I want you to get. One, because you're not going to get scores, so you need a service. There is a link in the description below. But you can use whoever it is you want. You can go to the bureaus, the agencies rather themselves, and pull your score with FICO. Because when you get your free credit report, it's going to be 7,000. It's going to be 7,000 pages because of the way it reports and prints out. We want a condensed version, but to be able to see the history and also those scores. So pull them, print them out, and review all of the pages. You want to make sure things are there that belong to you, that are reporting accurately, addresses, your name being spelled right, all of those things. Sometimes if you have a common name, you may wind up finding stuff on your report that doesn't belong to you. It belongs to that person with that exact same name. So you want to review all of those pages and then schedule your checkup, and then download credit score power moves. It's three moves, three things that you can do to get faster actions, to get faster results, right? Credit is on a 30-day cycle. Remember that though, right? It's on a 30-day cycle. So where it's power moves, however, you still have to allow for the process to go through the process. All right. So if this information has been helpful, please be sure to subscribe to my channel. Be a blessing to someone else, right? Share this information with somebody else. Definitely, again, learn it. The more you know, the more you can pass down to your children, which then allows them to pass down to their children. It's not just about you. It's about you, the next generation. And again, you should be planning and thinking about 10 generations down from you, at least at minimum, right? So again, if this information has been helpful, subscribe, share. Don't be a gatekeeper to this information. You never know what somebody is been praying for, looking for, wanting to do. You have the ability to help them do that. And remember to always give yourself some grace. What you didn't know yesterday, you didn't know. You know it today, now you move forward. You tomorrow can't give yourself grace for not moving forward because now you know. So you got to do something with the information. Give yourself some grace. Keep striving for your next level of elevation. This is about you and your own elevation. You're not in competition with somebody else. It's about you and elevating your family. And again, teaching it for the generations that come. Never, ever, ever give up on you. Never give up on you. You are so worth it. Invest in you. It's the best investment that you will ever make. And you absolutely, positively will not regret it. I promise you, you will not regret it. Thank you so much for joining me today. Again, I am Crystal L. Gunn, your financial strategist, licensed life insurance agent, and I will see you next time. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.